And we'll have links in there to a trade management plan where you can have downloadable worksheets on how to effectively put together a trade management plan and all kinds of things that you guys can use. It's a bunch of trading stuff that you can start using in trading. All right, so we want to make sure we're keeping focused. And a little bit about me. My name is Josh Taylor. I've been trading the markets for 12 years. And I got into trading full-time as a full-time trader 10 years ago. And let me tell you how I got into Forex. It's actually kind of funny. It's about almost 13 years ago. I was in a bank line in front of a teller, and I was like not cool. I didn't know anything about Forex or what it was, or even much about trading as it was. But it sounded kind of like the James Bond opportunity of making money type of for the financial world. It sounded like something really mysterious and cool. So I started digging into that, and I ended up coming across a webinar from a newspaper ad, not a webinar, but a seminar. I've learned since then that if you're making 50% a week in the markets, you're not going to do it very long because you're over risking your account, and you're going to get smacked hard, and there goes that account. So you can do it for a week or two at times when the market just hits you just the right way. And I think you guys know what I'm talking about. You're just playing dice. So we don't do that. So, but I've learned a lot of lessons. And since then, I became a Forex coach and mentor. I'm married with 4 kids, but I am a full-time trader. This is how I make a living, trading the markets. Different strategies, different styles, different ways of trading the markets depending on what the market conditions are. But I'm going to show you today what I think is one of the coolest strategies. And this strategy, something I learned from one of my mentors, who actually is a major bank trader. He actually is a trainer for a lot of major banks over in Europe. And he showed me this one little strategy. That's something that's a phenomenon in the market. And if you understand this little piece, I think you can start looking at the market a little bit different way. Very, very easy. But it's something I really like to work on. So during the time I've been trading over the last 12 years, I've obviously done a lot of things right. You know, I've been successful doing this. I'm making a living. It's giving me the lifestyle that I want. Some days when you wake up and you don't feel like being in the markets, or the markets go nuts like they did, a week and a half ago, I didn't trade that day. All right, I like to stay out of the markets on those days. But once the market is rocking again, or you actually feel like trading, it's a great thing about trading. You don't have to be sitting in front of a chart all day in the market. Okay, you can trade when you want to trade. It's the great thing about it. So during that process, done a lot of great things, and I did a lot of things wrong. At the very beginning, I blew through so many accounts, it was not even funny. And at one point, when I was getting really good at trading the markets, I had a 3-month spree where I just blew it up. And I was doing so well that I started increasing my risk. Now, right now, I risk about 1% of my account balance per trade. And I got extremely cocky, and I started risking 5, 6, 7% and winning all the time. And I was doing very well. There's days I made 15% on my account. Okay, and I had this account built up to about $130-something thousand. And in one day, right before Thanksgiving in 2006, I decided to take a trade on the pound dollar, and didn't leave a stop loss. I thought surely it's hit such a great level. This thing is going to go up, and I'm going to just make a killing out. It's going to go away for 4 to 5 days and come back. What happened is the market exploded downward, total opposite what I thought. It moved 1,000 pips. Go back and look in November of 2006, 1,000 pip drop on that pair. And I got margined out because I didn't have a stop loss. So I learned a huge lesson. When you lose over $100,000 on one trade from stupidity, and your wife is looking at you like she's very unpleased, that's a very quick, you'll learn very quick. So we're going to show you today some cool stuff. Some of you guys may be frustrated in the markets. We're going to show you how to simplify that. A lot of the problem is it's really not your fault if you're not getting the results in your trading like that you wish you had. Because really, I think Jesse will attest to this, there's a lot of garbage out there. This market has attracted a lot of internet marketers who have developed products that they've never traded a trade in their life. They're just trying to sell something. All right, there's nothing wrong with selling things. obviously we're all in business, or we all have jobs or some form of fashion that we do to make a living. But in this market, you've really got to be educated in understanding what the markets are doing. And so it's not your fault if you've purchased products or courses or anything along that line, some type of training programs that just don't work. So there is light at the end of the tunnel. You can make money as a trader. And so let's get into one secret. And I'm just going to keep this simple. It's actually a very simple little process, and we're going to talk about how the market trades in a range. Now, the market trades in a range 80% of the time. Now, this works in many different markets. Now, certain times of the market, it ranges less, and it starts getting aggressive, like if the market's very bullish on certain pairs, or stocks or options, or or is very bearish, then at those times this range bound part does not work. But 80% of the time there is some type of market range going on. This is why I like to trade when I'm trading Forex. This is why I like to trade across 26 different pairs, because at one given time there's usually something that's very range bound. And we'll talk to you. We're going to actually go to live charts in a minute. And you're going to see that we have sideways upward trends, we have a downward trend, and my favorite is when the market goes completely sideways. And a lot of traders talk about, they're struggling when the market goes sideways, and sometimes when it goes sideways for quite a while, how they can't make money. And in my opinion, going sideways when the market ranges sideways is the easiest time to make money, and I'll show you on some charts of how I look at those setups. So we're going to go through this whole process. We're going to, the FX market trades in a range, or what you call a channel, 80% of the time. I'm going to show you actually how to find the range. I'm going to show you how I choose, where do I take my entries, where I place my stops. And this works on a monthly, weekly, and daily, and all how to make it simple. Okay, so we're going to show you how to simplify this whole process. So let's do some live trading. You guys can still see my charts. Oh, I didn't have my charts open. Give me a second. We're going to boot these charts back up, and we'll start digging through some of these. Okay. So we're going to look at the start with the Euro USD one daily chart. In fact, I had this set up. I thought I had this thing set up where I had these cleaned out. So I'm going to actually do something a little bit different. I'm actually going to clear out all of these indicators, and we're going to zoom that in just out a little bit. All right. I had this trade set up that I wanted to pull out here. Here it is here. Okay, so one thing we want to look at is the market rate ranges 80% of the time. Let me find this pair I had pulled up already. Sorry about that, folks. I thought I already had these opened up. I had a Euro USD chart opened up, and it seems to have disappeared. All right. All right, we're just going to skip the Euro USD because that chart disappeared on me. All right, so here's what we're going to do. We're going to go to the USD dollar yen. So here's what I want to look at here. We'll go back to Euro USD in just a little bit. I'm going to draw something out a little bit different. But one thing we're going to talk about is when the market goes into what we call a channel, and we'll start digging into some of this out, and we'll show you. I'm going to scroll back. So here we have the market in a range. And so what we're talking about in a range is it starts bouncing between a predictable resistance level and a support level, and it stays there for a little while. Now this could be on a 15-minute chart, though I usually don't like trading like that because it causes needing a lot of tums trading the shorter term charts. But I prefer focusing on monthly, weekly, and daily charts. I like to look in advance as much as possible, but especially what Jesse was talking about, you can look in advance as much as possible and look on the bigger range of what's going on in the market, but you still have to understand, like today's market right now is very fast moving. So we're going to show you how you can set it. I like to set these trades up in advance, and I'll show you how we've had some really great winners doing that. But you still have to keep a good stop, because you need to give the market some room to breathe through these levels, and at the same time you do need to understand that when the market starts going haywire like it did the other day, you need to start closing out your your pending setups, your limit orders. So you can see here, like for instance, let me see how far back this USD. Here we go. Actually went range bound for quite a while there, didn't it? All right, so let's look right in this area here. You can see how for the Euro USD, I'm sorry, the USD yen, I'm sorry, dollar yen, was in a mini channel. So what it was doing, it was hitting the top. It hit a top twice, came back down, hit a bottom, came back, hit the top, came back down, hit the bottom, broke through, but then started working its way back in the range, and it didn't quite get up there, and it worked its way down. So here's what happened. The market eventually, this is like February 2014, the market went into this range-bound movement. Now sometimes it breaks out of that range and then breaks back in. So I'm going to show you how we, like when the market goes sideways like this is a great opportunity to start planning ahead on potential turning points in the market. We're really looking at market swings. And so what happened is the market came into this range, went up, and kept hitting in this range. Now this, resistance level is not 100%. It's especially on the higher frame time charts, the daily, weekly, and monthly. You've got to give it some room to breathe. If you look at this spike here, it shot 125 pips up and then shot back down at the range again. On a weekly chart, you would be using a stop bigger than that, right? Because that's just a small move and then a reversal. In fact, that on a weekly chart, that would look more like that. All right. So price, once it starts getting into a range and you can see it rolling, a lot of times what I like to do is start setting trades in advance to sell at the top of this range and buy at the bottom of this range. And we'll show you all here on that Euro chart here how I would look at recent activity over the last couple months and how I would have set up trades in advance. And so sometimes you will get stopped out when the market moves back into the range. Your buy position picks back up. You would have sold. So here's what I would have done. So once the market, the market's in the middle here and it's kind of sitting here stuck in the middle, I would have had trades set up to sell. Usually 10, 15 pips within this level and right around this level here, okay? You would have had a stop, depending on your chart, usually I like to do 50, 60 pips. I personally focus on a little bit bigger stops because I focus on 200 or 300 pip runs usually, even though this is a smaller range. This is only 150 pip range. It's a very small range. I prefer on some of the charts, we'll show you a little bit, that some of those ranges are, 500, 600 pips. And I like to let the market run for a little bit and close 200, 300 pips on these trades. But once a trade hits, let's say we got in here for a buy, we would have bought right here, and I would have already had this trade set. Stop would have been down a good 50, 60 pip stop. And once the market gets almost halfway or about halfway up into this range, I usually close 50% of my position. I've moved my stop to break even. Why? Because you want to reduce risk of that trade as fast as possible, right? If you already have made a profit, why would you take the chance of the rest of it stopping you out and zeroing out that trade? The saying that a bird in the hand is worth two in the bush is definitely true with trading. Lock in your profits early, move your stop, reduce your risk in the trade. But by this time, once the trade is half up and I moved my stop to break even, or usually a few pips above my open price, I would have already had a sell position right up in here, already setting, pending, and another buy position already pending down here. Okay? So what happened is, once the price got up to this level, the rest of my trade closed in profit. I took a sell position, it moved back down. I got half of it, but then it stopped out, right? But then took another trade. Half of it came down, closed in profit, the other half got stopped out, but all those, I closed half of them, 1, 2. All profitable. None of them stopped out at a loss. Took another sell position, 50% of it was closed, came down, pulled back, closed out the rest of it, took a buy. At that point, I probably would have got stopped out depending on how big my stop was. No, not on that one I wouldn't. My stop would have been a lot deeper than that. So, and it can continue going through these ranges, and I'll show you a little bit later on the New Zealand dollar back in spring of 2012, how we closed out over 2,000 pips, and most of those pips were on the New Zealand dollar, US dollar. It went sideways, like on a daily basis. We were taking buys and sells. It was a really cool little trade. So back to the Euro USD. So here we go. So I'm going to look at this little section here. Let's see if I can zoom this in a little bit so I can see a better range on this thing. No, that's not the right chart. I had this chart pulled up and I cannot find where I put this chart, guys. So we'll just dump the Euro USD for now. Okay, so we'll just go to some other trades. Let's look at the USD CAD, and we'll talk about the same thing. All right. So let's scroll back to the beginning, and we'll zoom that out. All right. So if we look at USD CAD, we're just going to scroll through. I need to clean up these charts, guys. But you can see how the market has gone sideways quite often, or in some type of channel. So a lot of this, you'll see a range within a range. So we have a range going in here, and it doesn't always hit the tops and bottoms, but you can see it gets very predictable. You have a range coming in here. You also have a range coming in this area. So there's a lot lower levels that you can trade some of these off the 4-hour charts. But as you can see, we'll start digging through the market. You'll see where there's a lot more market chop, a little bit tougher to trade. And then you see opportunities like this. Now this is a great opportunity when the market's going sideways. So what you see is the market has come up. You hit for a sell position, close 50% of your trade here. Move your stop to break with what I call in the money, a few pips above break even, because I'm going to set another sell. Because if it turns around right there again, I close that trade out and take another position. All right, you can see here it hit. We took a buy. Once the market went up, we took up profit, closed the rest of it out. It kept doing that for 3 days straight. So we closed out half positions, and then eventually same thing, and it kept on doing it over and over and over again. Okay, and so sometimes you're looking for, like this range right here is about 380 pips, and it usually it's taken about a week cycle or so for that range to complete. But a lot of times you'll take a sell position, you'll close 50% of out, the rest of it will close and break even. It takes another sell position. You might have 3 or 4 of those in a row before the market actually moves either against you or moves in your favor. And so trying to pick out these ranges, this is a very simple concept, and I think a lot of people think it's more difficult than it has to be. Let's look at the USD CAD monthly chart. Now, I love trading up the monthly chart. You definitely need to use a lot bigger stops, but you're also looking for a lot stronger run in the market. Now, as you can see here, we had a resistance level here, and then we started seeing a trend line forming here, and so that's still a range. Okay, it is range bound, especially though when the market starts moving up into this. Actually, Jesse was talking about this earlier about having a breakout. This is exactly what usually happens. When this market pinches itself in, it has no other way to go. At one point, it's got to break out at some point. And a lot of times when you start seeing the market moving up, you end up seeing that very aggressive breakout. The market started going up, hesitated, and then exploded up very, very quickly. In fact, one day, that's what was this 600 pip move in one day. That's a lot for the USD CAD. Of course, we've had a lot of that lately. But usually when the market is moving this range like this, I am very, very wary and usually will stay completely away from the sell positions because it's already positioned itself for a potential breakout north. So I'm taking buy opportunities here. I had a buy here, and I was scalping the market here because it keeps pulling back on me. Okay, stayed in the market for a few days. It shot up, closed 50% of my trade, closed the rest of that at break even, hit another buy position, and it kept going up. Okay, and then I had another buy, and it did not take those until it eventually broke out. Okay. All right, let's see what else I got here. Aussie dollar, US dollar. All right, Aussie dollar, US dollar. All right, same type of thing here. More recently, we are kind of in a range-bound market. Now, long-term, the Aussie dollar is had a sell-off for quite a while, and this market has really been taking a nosedive. Then it went sideways earlier this year, all the way through the spring. Kind of started working its way back up, pulled its way back into that range again, and then has continued to nosedive ever since. So this pair I'm really not staying into. I'm more selling the rallies and the downtrend at this point. looking how the market's going down, pulling back, going down, pulling back, going down, and I would be looking at if market pulled back here, but that's not a range bound trade. So the range bound trade would be more like when the market's going in here. Of course, you can zoom in tighter and see that if you really trade this market more on the 4-hour chart, you could take buy and sell opportunities very, very often through that range. Let's look at New Zealand dollar, US dollar. And guys, I'm kind of flying through this because I wasted 15 minutes. Sorry again, but we're whipping through it quick. I will send you more info. I promise. I've got a ton of videos on our blog that we show you how to do this range trading stuff. Some pretty neat things that you'll like. Okay, so New Zealand dollar, US dollar. Now, usually, I mean, since the spring of this year, this pair is the same thing as the Aussie dollar, US dollar. It's been on a downward run. However, at one point, this pair was very, very range bound for quite a while. And this pair alone, on top of the pound New Zealand, and I'll show you that in a little while, is a pair that I've traded a lot using this range trading strategy. So I'm going to dig through, and I want to take you back to the spring of 2012 and show you what happened. All right, here we go. All right, is that full screen on that? Yeah, no, there we go. All right, so spring of 2012. So the market had just come up from a massive upturn. I mean, it was moving very, very quick. And once the market's moved for quite a while like that, at some point it hits a level of exhaustion. Okay, no matter if it's going to continue up or if it's going to pull back. And ultimately, long term, if you see what happened, the market pulled right back to where it was. It's kind of like how trading the news is. A lot of times when you see the market spike at 500, 600,000 pips, once you see that the freak out is ended, most of the time the market ends up pulling back and back into its original range, and it's a great opportunity to go against what that original spike was. And I'll show you a trade here on pound New Zealand that did that. But ultimately, what happened is the market went into a sideways consolidation, and once we saw that this trade started going range bound in this level, we started setting buy positions and sell positions in these ranges. So let's zoom this up a little closer. So once we got hit in here, we started looking at way back, if you look back in the charts deeper, that there were some key levels in this area where the market had bounced a lot. So we had set up in advance, right around here, a sell positions and buy positions at the same time. In other words, no matter what way the market was moving, we were expecting this thing to go range bound until it stopped itself out, and we were going to take as much opportunity off the table as we could. So what happened is the market went up, we took a sell position. The next day it came back through, which ended the market day below this key level, and the market dropped. We took 50% of our position, moved to stop in the money, a few pips below my open. Market hit, closed my rest of my trade at the profit in which our buy position took, and I already set a new sell position at the same time. Market went up 50%, we closed 50% of that trade in profit, reset a new buy order after I moved my stop up. Market went up, took a sell, right? 50%, stop back out. This trade we actually got stopped out. I had a tighter stop on. I only did 60 pips, and it barely got stopped out and then came back in the range. So I waited. The market exploded down below this level, and it went into another range. See how that looks? One little range, another little range. And so we started taking sell opportunity and buy opportunity. At some days, we took a buy and a sell in the same exact day. And just this little market chop, and this looks choppy. An average trader looking at this sees that these wicks and rejections are so strong. All right, the market was very up in the air on trying to figure out what it was doing. The bears and the bulls were battling pretty hard, and so we played off of that, and we took a lot of pips off the table. I think it was right in this range of March and into April. We'd closed between this pair and several other trades we took that month over 2,200 pips. I think it was like 3,000 pips between March and April complete. Okay, it was insane. It was probably the biggest trading my Trade Advisor Pro clients have ever pulled up to that point, and it was a really, really great month. So let's go back to pound New Zealand. Now, this pair is one of my favorite pairs, especially once it gets range bound. It's extremely fun to trade. So you can see back here, that we've got some key levels in this area, and this is a little bit less range bound as it is to playing off of major support levels, but I have taken a ton of trades off of this 93.62 level where the market would come up, and so you can see a bit of a range. Here's a problem. It had a bottom of a range, which is more of a support level. The top of this range was very choppy. You could probably draw out a trend line here and see that there is a bit of a top, but it's very messy. The bottom is more predictable, and so we took a lot of buy opportunities off of that. The market exploded up and multiple times pulls back to the same level. This 93.62 level is a great area to take trades. If it ever comes back down there again, see, boom, 93.62. It just hits that level and just trade opportunity after trade opportunity after trade opportunity. But you can see in here, even like right here, let's take this right here. I'm going to zoom this in. Oh, that's kind of messy. Zoom out just a tad bit. Okay, let's try to pull out here. You can see just even in here, and this is a daily chart, right? You can see that there's these mini ranges, and all these are when it's an upward moving trend range, it is nothing but a trend line. So let me move that out of the way. With a support trend line and a resistance trend line, and there's opportunities to take these bounces in the market until it explodes out. And a lot of times when you find the right channel, you can take 2, 3, 4, 5, 10 trades at sometimes before you get stopped out on trade. All right. And a lot of times when the market moves up and explodes up and it hasn't hit my stop, I will put my take profit level at break even. And a lot of times the market settles back down, closes me out at 0 before it continues shooting through. That's not what happened here, but I'm just giving you an example. So folks, that is a very quick nutshell of this system. I will send you more. I'm trying to whip through it because I feel like I rushed through and kind of screwed up a lot of the beginning. So I'm going to go back to the slides and we're going to dig into a little bit more. So the whole idea is trading Forex should be simple. I'll show you a picture of a chart here. I mean, a lot of people that I see, students send me screenshots of their charts. My gosh, they've got so many indicators on these charts that you can't figure out what's what. And the key is that's not really how the banks or how the big players in the market play. They're looking ahead of time what's going on in the market. They're looking at simple support and resistance. Is the market going range bound? You know, where are those opportunities to take trades? You know, a pullback using Fibonacci, which is more of a mental support and resistance point. And so we want to make sure that we simplify trading. Normally when I'm trading, like looking at longer term trades, I'm trading off of clean charts like this, like I just showed you. A lot of people have charts that look like this, and I'm going to show you something here today, and to show you a piece of software we've developed called BlackEdge FX that takes even cleaner charts like this, which is still a bit choppy, to something like this. Much smoother, predictable, and how you can take a lot of the market chop. You see a lot of the wicks on these things because that's when the market's pulling back up, pulling back down, a lot of movement in the market, and how we've smoothed that out so that it cleans up what's going on in the market. So you can see a combination of where the swings are in the market, the tops and bottoms of these mini ranges and longer term ranges, and where to take entries in there that smooths out these trades. So the software we have developed over the last 2 years is called BlackEdge FX. In fact, right now, we are in the process of updating this software, and we're adding some new pieces in here that are really cool that are actually going to crank it up even more. And so I'm going to go to a live software demo. Now I've got this on a Forex.com account that I actually did the software demo. The problem is when I tried to open this today, I realized the password got changed and I didn't have time to call tech support. So what will happen is the software will open up and will pop up and give you an audible signal. You can set this up so it goes straight to your email on your phone, or send you a text and tell you there's a trade set up. And so you'll find, we'll get into this in here in a second. I'm going to show you how easy it is to set up the software though. So the first thing you do is you're actually going to go up here. We're actually going to do this because I'm not logged in because I can't find the dang password. Something happened, like more technical problems. Maybe the technical stuff is just not in my favor today. But all you do is open a new chart. And you're going to open that chart, and then you're going to set that chart as an M1 chart. Now that's a 1 minute chart. We're not trading 1 minute charts, okay? That is a recipe for a heart attack. Don't trade off 1 minute charts. That's very stressful. However, the 1 minute chart is meant for collecting data. So this would end up being a live chart that is built no other reason, just to collect data. It needs to collect candles, okay? So that takes literally 30 seconds to set up, not even that. And then we're going to go up here to File, and you'll end up in Chart, and you'll end up opening what's called a Euro USD M2 chart. Now, an M2 chart in our software is an offline chart. So as you can see right here, it says offline. This is not a live chart. This is the live chart that is gathering the data of what's going on in the market minute by minute, and that data is now being collected into the software. Now, normally it looks like that. We literally click on it. We go to template. You click on BlackEdge FX, and all this pops in just like this. So let me show you how this works. And let's just scroll back a little bit. Again, this account that I use for the software demo, I actually didn't log in since June. I've got multiple accounts on this. In the very end of June, because I don't have the password, it's not updating my M1 chart. But I'm going to at least go through and kind of show you how the software does. And this gives audible alerts and shows you the trade. So let's just start right up in here. So the market was going this way. So what we've done is we've developed a customized Renko candlestick. And what a Renko candlestick is, whereas a normal candlestick chart that you trade that we showed you earlier, those are based on time frames. So on a daily chart, each one of those candlesticks represents a day, right? So these candlesticks do not represent time frame. They represent amount of pip movement. I like to trade 15 and 17. So each one of these is representing on these charts. On my live charts that I use on my live account, I'm trading 15 and 17s. But each one of these candles now, these Renko candles, now represent a number of pips. So what happens is you're getting confirmation that the market is moved a certain amount before you start looking at taking trade entries, okay? We showed you earlier, trading those charts, you see a lot of those wicks. And the reason you don't see these wicks in these charts is because it cuts all of that out, and we're not based on what happened that day, but the number of pips, all right? So what happens is the BlackEdge FX Pro software, this is the Pro software, told me to take a sell opportunity. What do? I set my stop right above this recent swing high, and many times I'll stay in that trade until I get a reversal. It depends. Let me show you in this case. So we got in right around here, and the market came down. We took I stayed in that trade until it started consolidating, and once the market came back up and we got a buy signal, I went ahead and exited this trade. Okay, I did jump in this pair, and once I saw a downturn, we exited out. I actually closed out at about a 5 pip loss, so it was pretty small, but we took another sell position, another win. I got another win, a huge win on that one, because look at this. Here's one of the things we will talk about when it comes to managing your trades, is you've got to make sure that your potential wins, your risk to reward ratio, right, is pretty high. So even though I'm looking at a really tight stop, this market ended up moving like 4.5 to 1. So if you risked 1% of your trade and you closed out right at the bottom of this swing, you would have made 4.5% gain. So another winning trade, would have closed out early. It gave me a stop out right here. Another one right here, and once it started turning opposite color candle, I went ahead and closed out early, waited for another set trade setup. But what this does, it takes these mini ranges, folks, and it smooths out the market to help you find buy and sell opportunities. Sometimes the market goes side. In the members area, it shows you how to use the software correctly. And there are certain tops and bottoms where you want to be taking trades. I don't take these trades when the market's going these chops. I already have predetermined areas where I'm taking these trades. And so this is how this software ended up over a small period of time. I think it was, I don't remember the time frame. I don't have the numbers in front of me, but I know it was 52 wins, 7 losses. It was over 1,000 pips. And I think it was actually the pound New Zealand that we took it off of. It did very, very well. Huge trade right there. Market went to a chop. I didn't take that trade because this was outside of my buy and sell zone. But you can see how it does that. So I got a lot more in-depth demo we can show you later, but I think we're running low on time here, folks. But let me jump back into the presentation. So here's the question I want to ask you. What if you've been looking for a piece of software that really did what it said it was going to do? All right, imagine that. That really was a winning piece of software that really was able to pull solid trades, bottoms, combined with what I call pure price action trading. So in other words, what's happening in the market now is market moves and starts shifting now. This is exactly what Jesse was talking about, that you can't just look at trades in advance as much as you used to. It's a little trickier to trade that way. You can look in advance and see potential opportunities to buy and sell, but you've got to see what price action is doing right now, because the market is moving a lot faster than it did. It's jumpier than it was, 5-6 years ago. So what if you had a piece of software that could do it all? So here's what I'm going to offer you today. I'm actually going to offer you guys to use and purchase the BlackEdge FX Pro software, and we're going to give you a ton of extra goodies in here for the CTU webinar attendees. And so let me get in to show you what we're going to get with the BlackEdge software. So first of all, we're going to upgrade you to the BlackEdge Pro version. It's a lot more robust. It's a $2,997 value. No, you're not going to pay anywhere near that. So just hang on. We got a lot of stuff we're going to give you guys. We're also going to give you that secret bonus indicator on here. And I didn't even show you this on the chart. You saw it, but I didn't explain it. On the chart, basically, you see this bottom thing down here. That has nothing to do. You don't have to trade that. In fact, you can minimize that window all the way down. This system is based on a custom indicator that we have locked, by the way, that we custom built. We've been working on for quite a while. That really adds a lot of taking out a lot of the crummy trades that the market is giving false signals, and helps bring pure price action trading into the charts. Okay, so the third bonus for me to send trade alerts and trade market updates box or your smartphone. So twice a day, usually in the morning around 10 a.m. Eastern time or a little bit before, and usually around 4 p.m. Eastern time or a little bit before, we're sending trade updates on here's what's going on in the market, here's my buy zones, sell zones, here's opportunities. In fact, we're actually many times saying here's where I'm buying and selling, and here's where I'm placing my stop on this trade. And you can follow along. It's pretty cool. I think yesterday we sent out 10 or 12 new trade setups that we in one shot, all in one email. So it's pretty cool. We're going to give you 30 days of that for free. It's normally $97 a month. So here's everything you're getting so far, and we have more. You have the BlackEdge Pro, which is a $29.97 value. We have the secret indicator, which is $997 value. The BlackEdge FX template, that's a $97 value. We're going to give you 30 days of my personal FX trades, $97 value. And I'm going to give you the bonus number 5, which is my complete FX course. I developed, it's about 40 hours worth of just solid look in front of the charts and analyzing how to pull trade setups out and where to place stops, how to manage your trades. It's really neat stuff. We talk about all kinds of stuff. Support and resistance, Fibonacci. We're going to get into some more advanced tactics. And that course is normally $997. You're going to get that free as well. We're also going to get bonus number 6, which is my full detailed FX range trading course. Is everything I told you today on steroids, broken down much simpler steps so that you can actually start learning how to trade market ranges. When you see, then when you go in and you start opening your charts and you go, wow, I'm seeing a range. Now you'll know exactly how to get in there and trade that range. Is multiple phone calls with my support team, my trading team. We're going to start working through finding where the holes are in your trading and talk about your trade management plan, your psychology, because your psychology is one of the biggest keys to trading the markets. Okay, where's your head out and keeping your head clear? And we're going to guide you through to help you bypass a lot of the learning curve. Okay, we can shave years off of your trading learning curve. So again, all of this information, guys, we have a huge value that we're offering is $7,497. Now we're going to be offering this software to the public. We actually have about 400 customers using this now. Our own customers are using this software, and a few of our partners in the marketplace have asked to allow their customers to use it, but we actually haven't launched it out to the public. We only do this by private invitation only, such as working with high-level people like the CTU folks, and so it's going to be, when it does go to the public, we are going to be offering it at $2,997, and they're not going to get all the other goodies. It's just a software. Okay, so you're not going to do that. We are running a special today just for the webinar. $997, one payment. You own it for life. In fact, you get all the updates. We're about to update over the next 3 weeks. A really great update. Or we actually have an installment plan option that's going to give you 4 payments of $297 for the software. Now here's the cool thing. So I'll show you how to get there. You can go to blackEdgefx.com. In fact, I'm going to minimize the window, folks, and let me type this into the chat box, and we'll throw it in here. It is, let's see, blackEdgefx.com/CTU. All right, there's the link to that, and let's jump back here so we don't cause confusion here. And you can it's going to take you to an order page. It's going to look like this, and here you're going to choose your subscription plan. And here's a great thing, folks. We offer a full 30-day money-back guarantee. Use it. Work with my support team. It's very easy. We'll show you some screenshots of the members area. It's really easy to use. There's several pieces, several videos in there that show you how to maximize the software, how to install it. It is easy to use. Okay, and it works. But when you come to the order page, it's going to give you this. So you're going to choose overhead. You can do it at 4 payments of $297. So again, folks, you're getting our BlackEdge Pro software, a $2,997 value. The secret indicator that we use on a $97 value, the 30 days of my personal trades, not my personal trades, personal trades, is a $97 value. My complete FX course, a $997 value. The FX range trading course, a $297 value, and the consult with very powerful. So all of that for one payment of $997 or 4 payments of $297. Let me show you the members area, folks. And I think we've updated the members area since then. We actually changed some stuff in here. So a lot of this at the beginning, the licensing has changed, and it shows you how to set the licensing. your software, because if you buy the software, if you decide to refund, which is not a problem, or you cancel the software at any time, it'll automatically deactivate. We have code protected software. And then there's an installation course. It's 15 minutes, super easy to use. It doesn't take 15 minutes to figure out how to install it, but we get very detailed. And then the trading course shows you how we use the software, where to place your stop levels. There's a couple different trains of thought on how you want to close out your trades on your positions on your trades and move your stop, and you can choose which way you'd like to do that. But it's said, hey everybody, I wanted to say thanks for this for the support on BlackEdge FX setup. Sorry if I was a pain, newbie, haha. Have made 84% in the last I don't know what that is. I think it was 3 months. It's over 3 months since I started trading with it. Over 3 months ago. There it is. I love this. Okay, Stephanie in London says, so thankful to you, Josh, for BlackEdge. I've been a trader for 3 years, and the first time I'm actually making a profit. Software is very easy to use and very accurate. You're on my Christmas card list for life. So very cool. Again, folks, a $7,479 value. Our support team is here to help you every step of the way. The software works, full 30-day money-back guarantee. The cool thing is, if you decide at any time that you don't like the software, or maybe you just want to try it, we have people that purchase our products and sometimes say, hey, I was just wanting to check it out. Fine, that's no problem with us. But regardless, even if you decide to refund, we're going to let you keep the 30-day of my trades. We're going to let you keep the complete FX course, and we're going to let you keep the FX range trading course just for trying it out. So you have nothing to lose, folks. Just jump in there if you guys want to start testing the piece of software that really works. Again, blackedgefx.com/CTU. And again, full 30-day money-back guarantee. I'm going to try to figure out how to keep my slides up and pull this webinar thing up here without this thing doing this craziness that it does. I'm not sure how to do that. Okay, what I'm going to do is I'll stop the desktop sharing. Let's see, let me go through. Please answer questions posted in the chat. Okay, working through that, folks. Let me see what we got. And sorry about the screen here. I don't know how to get to stop that, folks. Let's see. We heard about 10 words. Josh at the beginning. Is that a major resistance level maybe worth checking out tomorrow? Yep, cool. I don't know. Was that the yeah, check out, especially on that pound New Zealand. When you see that 93.62 range, and it takes a while for the market to get back there. We are far from that range. We are 4,500 pips away from that right now. But just, you know, I have support and resistance levels posted out years in advance that I'm looking for the market to hit and bounce. Let's see here. If you have a working software, do you still need a mentor? You don't necessarily need a mentor, but a lot of trading, Venkata, is not just using the software. It's you learning how to control emotions, and you may be great at this. A lot of people, traders, especially in what I see in Forex, or less in options, but I see Forex because it tracks a lot of people that are looking to make a quick buck. They're just real solid traders, and there's people that are seeing the market and they're salivating, because you can make a lot of money if you know what you're doing. But a lot of that is taking pre-calculated risks in advance. So a lot of trading successfully is your psychology. In fact, I'm going to guess that that the team over here at CTU will probably say that your trading psychology is probably the most important part of trading. Let's see here. Is there free trial? There's no free trial, but you can use the software. We do have a $1 trial that we can send you. So we'll actually send you an email link to that. You get to try it for, I think it's 15 days. You can try that. There's no monthly ongoing maintenance fee. So it's this webinar pricing is based on one time and you own it. We do have a monthly subscription where it's just a monthly thing for $127 a month. What is the average pip win versus average pip loss? The average loss is actually about 13 to 14 pips. because when you start calculating how the losses happen in this, they're usually using about an 18, especially on the 15 and 17 Renko range, and we'll talk about that in the members area. The average loss, when it gets a full stop out, you only use anywhere from an 18 to sometimes a maximum I've ever used in there is a 32 pip stop. So I'm using really tight stops, but we're running off those bars. We're looking at getting the confirmation on the bars before it gives you a trade. The market's already moved a good bit, so what we're seeing is price action and momentum. The market is moving in the right direction. So we are using really tight stops for what we're looking for, a potential good size run. The average risk to reward on the software is 3 to 1. So when we're using a 30 pip stop, we're looking on a minimum of a 90 pip run. All right, so the winners on this are on average about 67 pips, and the reason being, a lot of times once the market is moved 30, 40, 50 pips, I close my stop, 50% of the trade, I move my stop in the money, right, which is below. If it's a sell position, I'm moving it below my open price, so even if it got stopped out, the second half of the trade is still closing out with a few pips. I'm going to lock out that loss. That's part of the psychology of having a trading plan. But the average win on this, but sometimes the market moves straight down very, very quickly, and sometimes you'll get 3 to 1 and 4 to 1. I've seen as high as 6 to 1 that I've actually nailed on the trade when the market moved very quick. I remember using an 18 pip stop, and I ended up closing the entire trade. It hit once I saw the market stop slowing down and hesitating, I closed it out at about 121 pips. So it was a really good trade. I think I made like 6% on one trade. Now that doesn't happen all the time. Let's see, are these swing trades or day trades? This is it's a combination of both. So we're talking about day trading the market, but it's focused on market swings with a combination of price actions. A very cool way of trading the markets. So it's looking for market swings, but it's adding into what's happening right now in the market. So the market starts shifting very quick. It picks up on that and starts shifting the way it's looking at the market. So it'll hold until the market hits a certain point, and then start taking entries. So average 67 pips loss, and yes, Shiva, yes, it's average 67 pip win, an 18 to 30 pip stop. Most of the time, it never gets in the 30 range. It's usually the low 20s, 22, 23 pips stop loss. And of course, it explains that in the members area. It's pretty cool how we, I just very simply like to set my stops right above or right below, depending on if it's a buy or sell. The most recent swing, a few pips above that, and you let the software do what it does. A lot of times, though, when we talk about the loss, a lot of times what will happen is the market's moving, then it hesitates, and then we get a reverse signal. And so a lot of times, as soon as we get the reverse signal, I will close out the trade and reverse the position. And sometimes the trade ends up closing 3 to 4 pips of the stop. So I mean, if you're risking 1% of the trade, you might have lost 0.15% of your account. So we're talking about tiny, tiny little losses for potential good moves in the market. So, folks, that's about all I have right here, folks. I've got a lot more. I know I've gone over in time. I apologize for the mess up here earlier, but this is over the phone or email. It's over the email, but if we need to dig deeper, Shiva, I do have a tech team that jumps on the phone on Skype. My tech guy, Brandon, will definitely make sure you guys are up and running. We take care of our customers very, very well. We've actually done screen sharing with a few customers that were newbies in the market and set up their software for them. We can't do that with everybody because it would get overwhelming, but we're here to help as much as possible. So we're here dedicated to make sure your software is up and running. So thanks to Jesse and Denise for having me here again. I appreciate everything. If you guys have any questions, I'm going to pop one quick email in here. You can send an email to my team. If I can get it in here. support@blackedgefx.com. Any questions you have, we will be glad to go over that. And you guys have a good one. Okay, I appreciate it. Enjoy the rest of your evening or day wherever you're at in the world, and enjoy your trading.